Hey everyone, thanks for joining. We'll just get started in a couple of minutes. Just waiting for a few more people to join in. We'll be up shortly. Hey everyone, thanks for joining. Hopefully you can hear me okay. We always normally just wait a few minutes just to let everyone join. So I should have the Exact Accounting team on here as well. If you guys can just turn all your cameras and your microphones on so everyone can hear you. Hey guys.
Okay, Jules.
Love the uniform
Morning.
background you've all got.
Of
course.
Wait, Josh, you're in the office. Nadia in the office as well?
Yep.
Yeah, and Dan, you're at home?
Home office. Yeah.
Cool, awesome. Well, guys, for those of you who haven't joined a webinar with us before, we've done quite a bit with Exact Accounting. So we kind of want to do something a little bit differently today, guys. So this is not a specific topic, and we're kind of a bit unsure how it's going to go and what directions you guys are going to ask questions in, but really just wanted to do a sort of an Ask Me Anything session with the team here. Don't ask me anything related to bookkeeping or tax or company structures, because I will give you an answer and it will definitely be something you shouldn't do. So this is the expert panel we've got here. So if you guys could maybe just introduce yourself, and we'll start with you, Josh, because you're on the top left-hand corner for me.
Yeah, perfect. So I'm Josh Robertson from the tax division. So there's the tax and compliance, covering off on everything from licensing, including HBCF, QBCC in Queensland, and all tax avenues of the world in Exact.
Awesome. And then Nadia?
Morning, everyone. I'm Nadia Fulyun. That's how you pronounce it. I'm the client director at Exact Accounting for the bookkeeping division. Everything front end, bookkeeping, payroll, all of that. That's me.
Awesome. And Dan, you've probably seen more times than you care to remember on this.
Yeah, I'll give you the Jenny Craig version. So I'm Daniel Wilkerson. I'm a partner here at Exact Accounting. I look after the CFO advisory division, and I'm probably what you call a commercial accountant. And I'm almost the exact opposite of Joshy. He does tax compliance structures, all that stuff that I can't do, and he's amazing at it. Whereas I'm all about the future, growth, margins, budgets, scale, all that sort of fun stuff, or at least from my point of view, anyway. Or I say that when I can't do the other stuff, but that's me.
Your stuff just has to change less than Josh's every year.
Yeah, pretty much.
Awesome. Guys, just for those who don't know, I used to work as an account manager for NYOB. It's obviously an accounting software. And one of the things that I used to always speak to my partners, my bookkeepers, accountants about was always to try and specialize in an area, because we had a lot of bookkeepers, a lot of accountants that have some clients in manufacturing, some clients in trade, some clients in hospitality, et cetera, et cetera. And what happens is those accountants, those bookkeepers, very, very rarely, and I'm going to say almost never, can actually get deep enough in one particular software, one particular area or industry, which means that the advice they're giving to their client doesn't tend to be as good as it possibly can be. So we're at Buildxact, and what I always try and do as well is pick people that work in a specific area. Obviously, for us, it's construction and builders, and that's why we work so closely with Exact Accounting. They're the best in the business. They work really, really in depth with builders. They always have good experience and good knowledge to share. So that's just something I wanted to do just to sort of talk these guys up in terms of how they work, the knowledge they have. So this is a really good forum to ask questions. And if you you don't feel comfortable, obviously please do, but if you don't feel comfortable, I'm sure they're happy to take questions offline as well if you do have any that you can reach out to the guys here as well. So just something I wanted to say first, but just to get us going, just want to see where everyone is, because obviously depending on where you are in the country, different, you know, tax laws and things are going to apply. So if we can just get you guys to pop into the chat where you are in the country, what state. If you want to go even further and say where in the state, that'd be great. Harvey Bay, Louise. So a few Queensland, Brisbane, Toowoomba. I'm going to be in Toowoomba next month for the Master Builders Roadshow. Got Auckland, Noosa,
NZ.
Perth. Country Vic, awesome. Central Coast, Hunter Valley.
Yeah, excellent. Good spread.
Awesome.
Very
Awesome.
good.
And guys, if we can, obviously you've joined here, I'm assuming, to ask some questions about your business, your tax, your accounting, whatever. Can we just get some idea about what you guys are actually looking to see, to achieve, to ask in this session? Like what kind of areas you're looking to get some more knowledge on? If you're here just to hear other people's questions as well and just get some understanding, that's perfectly fine as well. But just pop it in just so we know kind of what areas we can focus on a little bit. Who's gonna be the first cow off the rank? There we go. Yeah, Naomi, tax planning.
That's good.
Reporting. Yeah.
Here we go. Tax planning, reporting for cost plus projects.
Specialist bookkeepers, Nadia, you're up.
Yeah. That one.
Yeah, you came to the right place, Andrew.
Yeah, right.
Yeah.
Retirement and some planning. Yeah, good. Some succession planning. That's a good topic to be talking about.
Yeah, I had actually had a guy recently. I think he's either just signed to Buildxact or he's about to, and yeah, he's got two young guys that are taking over his business, and yeah, he signed up to Buildxact to try and like get all the systems and processes up and running so that he can hand that over. I think a lot of people are in that kind of position now where it's yeah, the handover and retirement sort of is becoming a big thing. Yeah, awesome. All right, well, guys, feel free to jump in and chat. We haven't got you know, hundreds of people on here, so we want to try and get as much of your questions answered as possible, and to go in as you know, sufficient detail that requires. So, guys, what do you want to do? Do you want to open up the questions? Do you want to go through a particular area based on what people have commented first? What do you think?
I wonder whether it was a good start, Jules, on the start of the ecosystem, because we've had the bookkeeping question now. That's usually the start of the business ecosystem, is the front end. So Nadia, might be great to give a high level of the bookkeeping.
Yeah, awesome.
Yeah, happy to do that. So yes, bookkeeping is the front end of everything. And I would say with any startup, if you're going to start up correctly, start up with a good tech stack as well. If you don't have it already, make sure you get a good tech stack. So the very popular ones that we are also working with is obviously Buildxact. And then also your accounting software. We are a Xero platinum partner firm, so we prefer Xero obviously, but there's MyOp and QuickBooks as well. And then also your time and attendance for timesheets. There's different systems out there. If you want to save costs, Xero.me is totally free and it's very user friendly. And then other platforms as well, like text for capturing documents. So I think the key thing with a good bookkeeping system is making sure that the data that goes in is not rubbish, because if you're going to put in the rubbish, there's rubbish coming out. So having a good tech stack that works and automates the process is absolutely going to make your life a lot easier. One of the other things as well that I might mention is getting into a really good routine. I see a lot of clients, because they're busy with their business, they tend to neglect the bookkeeping side of things a little bit, and then BAS period comes around and it's a big panic trying to get everything into the account. So we absolutely would say that you need to make sure you monitor and you maintain your accounts on a weekly basis if you can. If you're not able to, then it's definitely a good idea to get somebody to do that for you, whether it's in-house or external. And the other good thing about that is you will find that whenever you need financial information, if to make any sort of decisions, you want to have your accounts up to date so that you can immediately make that decision as best you can with the information you've got. But yes, being disciplined with your bookkeeping is where everything starts. If you can't be disciplined there, then everything else is going to sort of fall short a little bit, I think. And also, it's important to make sure that your payroll is done correctly. If you are tracking all costs on jobs, you can definitely track labor costs. It's definitely a good idea. A lot of people are not aware that they can actually split their labor costs between cost of goods sold and overheads, but you can monitor that and track that through a timesheet system like Xero.me, which is free with your Xero subscription. And it also gives you better figures and better margins because it gives you more clarity on your financials. So yeah, I guess that is the main thing to start off with, is getting into a really good rhythm of being disciplined with your bookkeeping. The other thing is as well that we find a lot is when clients start up with a new accounting software, they might have a very, very crowded chart of accounts, which also overcomplicates things. So if you're not sure which accounts is needed, reach out to the experts that can help you with that and just set up that chart of accounts for you. So it's not overcomplicated. A lot of clients try to set up an account code for every single activity that they do. It tends to overcrowd the chart of accounts. So I wouldn't recommend that. Try and keep it simple. And it's also a lot easier then to get the financial information that you need. And also the correct margins, obviously. Within Xero, you can do cost tracking as well. For those that don't know, I'm pretty sure a lot of people are already doing that, but the cost tracking is really a lifesaver because you can track all your expenses on jobs, even on overheads if you like. So it really does make it a lot cleaner that way. And yeah, and then, getting into the routine of running, I would say, a weekly supplier pay run if you can, or fortnightly or monthly, depending how big your business is. But the key thing is to get into that disciplined rhythm of things, because then there won't be any frantic panic when something is needed, when you need reports, when you have to do a BAS, or when you're deciding to buy a new asset, So that is the key thing. And I always say to people, certainly if you're a startup, have a go, do it yourself, and then you can hand it over as your business grows. But I wouldn't recommend it when your business is growing and it's getting bigger. Rather get somebody internal or maybe external to do that for you. Yeah, is there any questions on that?
Yeah, I think we had
A couple,
There's a
actually.
bit more of a dive, isn't there? So probably on the job costing, specifically labor, we might unpack here a little bit.
Yeah. So with the labor, what specifically is there on labor that you want to know? Just reading these
find
questions.
now. This one from Naomi, is it, to track labor hours?
Yeah. So
And Kelly has a similar question with Xero.me
yeah.
and timesheets, but it's obviously if you're using Buildxact, there's a potentially different process, right?
Yeah. Yeah. So you can use Deputy as well. Deputy is a very smart system and it actually has the awards bedded into it. So yes, you can use Deputy as well. It does come at an additional cost. I was mainly talking about the startups and the smaller ones that want to, don't have those big payrolls yet. If you've got a big payroll, then definitely look at Deputy. But I'd say if you've got up to maybe 20 people, Xero.me would be sufficient.
Yeah.
And you can track your job codes there. But yes, I know that Deputy also integrates with Buildxact, which is also in that tech stack. If you are a large company that uses Deputy, definitely that is also an option. If you want, I can share my screen and just show you an example
That'd be great, because
Yeah.
I know
Yeah.
Kelly has a question around how you do zero me and timesheets and job tracking. It's probably the
Yeah.
turning on of the tracking categories and how that works with the timesheet. So
No problem.
you'd
Okay,
show
I'm
that.
going to share my screen. Hopefully I share the right screen. Can you all see that?
Can.
Yeah.
Yeah.
Okay. So this is a dummy company that I created and just a dummy timesheet that I created in Zero. So Zero Me is a mobile app that all your employees can have access to. They can literally put their timesheets in through the app, and then you'll still have an administrator who goes into your Zero file and actually reviews and approves those timesheets. So you still have control over it. It's not like anyone's going to put in time and just get paid without you even knowing what hours they put in. So you can still review it and administer that. So the way it's usually set up, I'll just do a duplicate quickly there. The main thing if you want to track jobs in labor hours is you need to make sure that your payroll settings are set up correctly. If you go under settings, in your payroll settings, you need to make sure that you've got this switched on. See there where it says timesheet category? It's got a little drop down. That's where you select which category you want to track your timesheets on. Now, in order to track timesheets, you also need to have all your job codes set up, which I'll also show you for those that are not using it yet. Under your advanced settings, when you go to tracking categories. So this is where, and this is just a dummy one, so we just added these few job codes there. But this is, you can get 2 levels of tracking. In this case, we've got a job code and a stage, which might be framing, insulation, all that sort of stuff. But you can choose your 2 trackings. Generally, the first layer of tracking is your project code or your job code. And this is where you add your different job codes. When you then go and enter timesheets, and your employees will be able to see this in Zero Me when they enter their timesheets as well, you can select the earnings rate, whether it's overtime or ordinary, and you can also then select which job. It actually gives you the drop down of those job codes that you set up initially, and you can select which job you worked on at which site and how many hours. So then all they have to do is just punch in the hours on a daily for each day, as long as their total hours for the week add up to the total hours they've worked, basically. And then the way that these pay items are set up as well in the background in your payroll settings, it will then report your cost of goods sold on labor and your overheads on labor separately on your profit and loss statement. So that's how you're going to track your labor for direct costs. Does that answer your question?
I hope so. It was fairly detailed.
I'll stop sharing, then I can read the questions. I see Pro Workflow. We made a move to using Pro Workflow LinkedIn,
Yeah.
Zero, and Buildxact. Much better for backcasting and stuff. I'll look into that. I'll
Yeah, I
look
haven't
into
heard of
Pro
those guys
Workflow.
before. I'm not sure
No.
anyone else has experience with them.
No, I haven't heard of them before, but I'll definitely look into that because I really like systems and I'm always interested to see how these different systems work.
We never would have guessed, Nadia.
So Kelly, does that give you the high level? This is recorded too, so obviously you'll get the recording. So if you needed to, you could watch that back.
Yeah.
So I think there's a question there for Nick. You know, software to manage building projects. Have you got a preference, Julian?
Yeah, I think so. You can use us.
No, Buildxact's good. I mean, bias aside, if you haven't tried it out, get onto it, download a copy, get a free version, have a play. It's excellent. Give it a go.
Yeah, Nick, if you haven't seen us already, you can always just hop in and like I said, have a trial, play around with the software, and there's a one-on-one demo you can get as well. So if you want to ask more personal one-on-one questions, then you can do that. We're pretty good at, if we don't think you're going to be a good fit, or we're going to be a good fit for you, we're pretty good at telling you to go somewhere else. Like, you'll have a better solution with that. But for custom home builders, we're a really good fit. Probably, I would say, until you get to sort of that maybe 10, 15 employees is where you probably start looking at something a bit bigger, maybe looking at bigger investment. Anything below that is probably where where we're a really good fit for. And the more we add to the software, obviously, it gets even better. All right,
There's probably a good one in there for you, Joshy. Ingrid, good to see you again, or good to see you on another one of these. Can you swap money around from different bank accounts belonging to different companies to avoid high interest rates?
Yeah, I hadn't quite worked out exactly what was being asked there. From different companies. So you're talking about like different banks?
Yeah,
Ingrid,
so
I'm happy for you to jump in, Ingrid, and clarify, because I'm more than happy to answer. Make sure I understand what you're asking.
are we able to actually allow people to speak on this, guys? Like, can we?
That's what I was hoping.
Yeah, let me just see if I can do that, and I'll just give Ingrid the opportunity if she wants to.
I mean, if you're just shuffling money around from one business to another, so entity A might own A bank account and entity B might own B bank account. You want to push money around, you just push that through directors, or sorry, not directors' loans. The intercompany loans is just one business loaning money to another.
Yeah, if that's what we understand, that you're managing multiple companies, Ingrid, in the same sort of group, then fundamentally there's no sort of major problem around it. But obviously there's things to manage around working cash flow and all that sort of stuff, if we've understood that.
So I can actually allow people to speak. So Ingrid, if you're still there, I haven't seen a response come through to you on the chat. If you are still there and you want to delve in a bit deeper, then yeah, please just pop it in. I'll allow you to speak, and you can jump on and sort of. Oh, yeah, she's put in there. So yes, Dan, that's what I mean. By the end of the year, the accountant should be able to pick it up.
Yeah.
Yeah, short answer is yes. I mean, probably more Josh's lane than mine, but if it's just pushing money, I guess money from one account to the other is just a loan between entities. And as long as, the asset of one entity, because they've lent money out, it's going to be an asset of 100,000. You go to entity B and there's a liability in there, 100,000. As long as those two match, giddy up. But you need good bookkeeping in there, obviously.
Yeah, the only thing to be aware of, Ingrid, because I understand you're from Queensland from memory, is one of those entities is probably QBCC registered. Be careful of your minimum financial requirements moving money around between entities. That should be something you have a nice keen eye on pre-30 June before you finish the financial year. Make sure money is in the right buckets, is basically the way to put it, before 30 June.
There was some questions in the Q&A section.
I was interested about Lester's question, actually, around the escrow question. I wasn't.
That's what I was about to do.
Yeah. Is Lester actually, are people actually able to speak on this now, Giles?
Yeah, Lester, if you're okay, I'll allow you to speak. I don't know if I turn it on, if it will activate the microphone instantly. So I don't just want to turn it on unless I've got the go ahead to do it. Yeah, that's okay. Okay, let's do that. Lester. For some reason now you're not even showing in my list of.
He's gone to the top because he put his hand up.
Oh yeah, there we go. All right, Lester, you should be able to talk now.
Hi, how you doing?
Good.
Hey, mate.
Good. Yeah, you've got a hot topic over there. We're getting bits of it here where there's reticence with new clients or the slow to sign up because they're worried that their payments won't be used on their project, and ultimately the builder goes down. There's half a dozen or 60 houses that aren't complete, but they've paid a lot of money. So we've got master builder contracts here that have they have the requirement to escrow money. And I know of a company in Australia that's looking at escrowing money as well, offering it as a service. So that's going to be a new, the payments go into an escrow account. The builder certifies that the subbies have done the work, and that's how the money's released to the subbies. But the builder himself has to be validated by someone. I'm wondering what what's the money movement issues, given the money has been paid, but you can't access it? And are there any tax implications with this and timing?
This is a very interesting one. I know in there's sort of a blend in some states. I know Queensland have this whole trust account issue in itself, but you might be talking like a provider, as an example, a provider I think like C2C might be a provider that sort of do this, where you basically put the money into essentially like a trust and you pay suppliers directly, and the builder only really gets the money that's linked to their margin.
Might pay to explain what an escrow is to everyone too, Josh, because others might not understand it.
Yeah, so it's basically, we can call it a trust, or it's basically a quarantined account. But the builder just can't grab everything from it. It's basically parking it in a somewhat protected environment where people make sure they're definitely getting paid, and the builder's essentially only able to access the money as they've actually completed work and made sure that everyone else is paid as we're going. So it's essentially like a trust account concept. And I know there's a couple of providers coming onto the market now. We haven't seen too much going deep into these sort of service providers, but I can see why people will be more comfortable using them moving forward. I think you're probably right, Lester, that there's going to be an industry movement towards something like this. But each state, unfortunately, has their own version of what this could look like. And Queensland is dabbling in the actual project trust space at the moment with varying levels of success. But have you been using this yourself?
Not for a number of years. I'm probably curious because the Financial Management Act and a number of, if you look at banks, will they even operate an account? Because it essentially is a financial management and clearance account. So I'm not sure on who's legitimate to do it anyway. It interests me that I see contracts with the requirement to escrow money, but no one's actively processing it.
Yeah, you're probably touching on a point that understanding of contracts is probably something fundamentally that we need to get across as an industry anyway.
Hey, Josh, I wondered, because it is such a topic in Queensland, and I know that it happens in other states as well. The way that industry seem to be solving this at the moment is the project trust arrangements for larger projects, which is where, we see a lot of, the damage across the ecosystem when a big builder goes down. Given that that's coming through, is it worth just touching on that as a concept so that people understand how that's working?
Can I just check in two other allied topics on this? One is retention. So how do they work in conjunction? And the other one is liquidated damage clauses, which could happen at the end, because they all seem to me to fall under the same umbrella.
Yeah.
Yeah. This is actually an area that's going to cause a bit of stress across the industry broadly, because each state has their own version of it. So I'll sort of answer what Phil was saying around what are we doing in Queensland around this? What is the government doing around Queensland for bigger projects? But admittedly, they're pushing on with stages to bring the contract level down to sort of 1 million. Is the project trust. So I'll answer the retention trust separately, Lester. So the project trust, what Queensland are doing is for eligible projects, we're basically saying that a specific bank account needs to be set up, similar concept, escrow, where the builder is the trustee, but all monies received from the client have to go into this trust account. And essentially, they're there to pay subcontractors directly from a trust account. So the builder just can't sort of take all the money themselves. It goes through this trust account, which does get audited by the regulator. And so that is the mechanism that Queensland's running at the moment. It's still fairly fresh, the concept.
And the threshold for that, Josh, like who does that affect right now?
At the moment, if you're working on government contracts, it's any government contract over 1 million is caught by it. In terms of private industry contracts, it's any contract over 10 million. But that is coming down to 3 million next March, October next year. And so that's going to sort of create waves through the industry. Queensland's a bit of a test case here. We're trying to see if it actually works. Initial indications, though, which is true of any new legislation, is it might not be working the way they expected it to. But that's where the industry wants to go, because if you just sort of step away from project trust, the industry just wants security of payment is basically what we're trying to get at. So, and I understand why. And then from the client's perspective as well, and particularly if you're dealing with mum and dads building homes, they want to make sure their builder isn't falling over, right? So if we're trying to make sure that we're, people are getting paid and projects keep running, the industry are going to keep moving towards these protection mechanisms.
I think I'm Phil, by the way. I also work at Exact. And I was just observing the conversation and saw some of the questions in the chat, and I thought I'd just jump in. I reckon probably a lot of people on this webinar won't be as affected because we're probably dealing with a smaller kind of project. So if people have specific questions, they want to reach out to us about that kind of arrangement, and fellow accountants as well. If there are any questions, then please, reach out to us directly. Dan, I reckon you should answer this question around retirement and how to maximize my profit on the way to that golden period, just so we can change gears a little bit here. What do you reckon?
Yeah, happy to give the abridged version of this one. Who's asking that question? Phil?
Andrea.
All right. Look, I mean, if you want to make money in this game, I mean, sort of step one, square one is knowing your numbers, know your margins, know your profits, defend that margin all the way through the build. If you've got a build that's, costing $600,000 to the client and it's $500,000 to slap up, as far as cost of goods sold goes, so we're not talking about overheads, and you have a GP of 100K, you need to defend that. So I guess sort of step one, square one is making sure you have the right systems, processes, tech, people, consultants, whoever it is, whether you're a small business or a large business, I guess help you defend that margin, I guess, along through the build. So having the right tech in place, people like Nadia in the background, or people that specialize in your field, knowing your numbers month to month as well. So where are you tearing up money? Where are you gaining money? What's your capacity? Having a really robust budget in place for your business too. So what's my revenue? What's my COGS? Direct costs, same thing. What's my gross profit, overheads, and then what's my bottom line profit? So I think probably the first step is going, well, look, if you've got 5 years left in the tank, where's your business now? Do you want to maintain? Do you want to scale? Do you want to end on a high? And I think it's going, well, are you hitting a 10% net profit return in your business, which you need to do in that sort of building space? And then you replicate that for the next 5 years and go, how many staffs do I need? Et cetera, et cetera, et cetera. And then you measure yourself against that plan. And then when you get to the end of each year, or, ideally each month, you want to measure yourself against that plan and go, have I hit it? And then if not, why not? And then rinse and repeat. So if you want to maximize profits, you have to micro measure your business in all locations. Where are you gaining? Where are you losing? And hopefully when the dust settles, you're hitting your budget and hitting your plan. And then you rinse and repeat that for the next 4 to 5 years. That's the short version.
And so the things, Dan, that you would not live without if you were in that situation would be, I'm guessing, job costing. So like, making sure you're measuring all the costs against a particular project.
Yeah, 100%. I mean, if you're running a business, and I don't really want to talk about overheads because people manage overheads to within an inch of their life. I mean, where you're going to make money and move the needle and all the rest of it is around that gross profit line. So revenue less your direct costs for each of your build will give you gross profit. That's the stuff you should have under the microscope. So to be honest, I mean, if your business is making 20K, 40K, 60K in GP a month, and you're not doing WIP, measuring yourself against a budget, I mean, you might go, hey, Dad, is 60K good? I'm like, well, I don't know. I mean, what's your GP percent, or what's your gross profit percent? Is it does it start with a 2, or does it start with a 1, or is it single digits? I mean, in the building construction space, it has to start with a 2, unless you're a monster project home builder doing, 50 starts a year, whatever it happens to be, then you probably sort of get into the 15s or, the teens, absolutely. But you have to have that job costing in place, because out of that 40 or 50K that you have on the go at any given point for your business for that month, and this is just pretty standard big business thinking, that this whole philosophy, which is a bit of my background, I want to know out of that 40 or 50K, out of those 4 or 5 jobs you have on the go, which ones are on budget, on track, what's running over. And honestly, if they're on budget, I really couldn't care. There's to budget and plan. So if this project here, project 1 was supposed to generate 20 grand this month, you came in at 20 grand, couldn't care. It's on budget to track. If we go through all those jobs, you get to the bottom, and our original budget sort of said, we should have made 50 grand this month, only made 40, and we got this bleeder here because of Tyler in bathroom 2. He should have only cost us 10, but it came in at 15. Well, guess where I'm going to spend my time? Why did that happen? What went on? What's going on? And then how do we pull that back? That whole process is, job costing. So thanks for the prompt, Phyllis. And then obviously it's just micro measurement.
And you mentioned the budget as well, as in, measuring against the budget. So after job costing, probably the other thing that you wouldn't ever live without is having a proper budget, where you're tracking actual V budget every month.
Yeah, I find the whole budgeting piece a bit fascinating, actually. I mean, because every big business that I've been a part of, they all have a budget. What's our plan? What's our roadmap? What's our scorecard to make sure we're on track? Are we making the money we want to? Profit doesn't have to be a dirty word. I mean, if I'm in business for myself, I go, speak to the wife or the partner or whoever it is and go, hey, here's our financial year budget for the coming year. This is the money we want to make. This is the wealth we want to generate. I'm going to talk to people like Joshy to give me good tax advice and talk to a financial planner. Otherwise, how do you sort of measure yourself? What is your measuring stick? Because people might say, hey, Dan, I've made 20 grand for the month. That's awesome. I pop the hood and I go, well, that's only a 5% return. That's rubbish. So you have to have a budget and something to measure yourself against, because it also gives you a bit of a barometer as to what's coming into the future. Because what will happen is that in a really good budget, it isn't just last year plus 5%. It's a rockstar budget is, here's your budget, here are your builds, here are the timing of the claims, here are the COGS impacts, here's your overheads. And then you sort of get this taper off with your existing builds. And then if you really know how to look at a really good budget, it'll actually tell you where your next start needs to be and at what value. Because what will happen is that your current projects will taper off, and you can actually back calculate where your sales need to start and go, oh, geez, I've got a hole here in Q4 because my revenue drops off and my profit goes from 10% to 2% or negative. Actually, I need to have a start in April. I know leads are taking longer and longer and longer. I need to start hustling around December, January to make sure I can do the courtship, speak to the architect, get the client on board, and that's how we go. That's a really, really important tool to have.
Yeah, there's a question. Sorry, Julian, I'm just taking your job.
Go ahead.
There's a question there, sort of hot on the heels. I don't have the ability to fund a full-time accountant to put in place micro at this level. What can someone do to track? Oh, let's just move. I mean, essentially, it's about wearing the multiple hats, tracking hundreds of cost codes, capturing data. It's a constant full-time job. So I think this is that challenging question with the journey of a business owner, where there's just no way around it when you start out. You actually have to wear all the hats. What's the advice around when to take hats off and what are those hats, and how do you kind of navigate that?
Yeah, really, really good question, actually. And I actually get this conversation a lot. And this is right in our wheelhouse with what sort of I get up to. When's the right time to hire an estimator or a contract admin or another bookkeeper, or can I afford another supervisor to come on board, whatever it happens to be. And look, this could be a bit of a joint tackle question with Nadia as well. I mean, what you need to do at the start, depending on what stage you are in the life cycle. I mean, if you're sub $1 million or about 1.5 turnover each year, you are wearing about 80 hats, to be frank. You are site supervisor, HR, business analyst, IT tech expert, the lot in there. And then as you sort of scale, you go, right, well, when can I sort of bring on an admin person? Or, probably the best one to outsource quickly is bookkeeping, because you're commonly going to be good at swinging the hammer, doing sales and all the rest of it. I would get bookkeeping off your desk ASAP, because you are a bloody expensive bookkeeper. So get that off. Bookkeeping isn't expensive. I mean, it's all around cost versus value. You don't have to have a full-time accountant in there doing it. Bookkeeping is not going to cost you an arm and a leg. You don't need them for 40 hours, especially if you're sort of sub $10 million.
And if I can sorry, Dan, can I just add there as well? If you get somebody, an expert to help you with that, they also coach you into getting into a really good routine with your bookkeeping and building really good habits. So whether along the way your business get really big and you decide to get somebody internal full-time, you've already got those processes in place, which is best practice.
Yep.
So
Yep.
it's sort of a coaching process as well. It's part of the growth process, but you can definitely eventually get somebody internal, but then just carry on with those best practice.
Yeah, it's a thing where, and look, there are other outsourcing models, people around. We're not the only options. There are other options in the market as well. So this isn't just a exact sales pitch, but you got two options really. You can, well, three. You can keep doing it yourself. You can try and hire someone internally and hope that works out, or you can use more of an outsource model where you're going to people who are already working in that space, already understand the processes, and you can learn as a result of that. And that's what we sort of see across a whole range of disciplines. Estimating's another one. There are some really good external outsourced estimators that you can work with. At some point, though, you might get to a scale where that makes sense to bring it in-house. And you know enough about the detailed, function of estimating to be able to bring it in-house then.
Yeah, if I just want to add to that as well, and kind of what I mentioned at the start is, like I said, when I was at MYOB and talking about this, and I've been at Buildxact for about 5 years now, and I was at MYOB for about 5 years. So we're talking sort of 8 years ago. Bookkeeping for the majority of bookkeepers was just transaction coding, and that was it.
Yeah.
And then accounting was pretty much just tax, and that was it for a lot of people. And there's just been transformation with a lot of bookkeepers, a lot of accountants, to offering these kind of services and expertise, because this is what benefits the client. And what you'll find is that if you outsource it to people that know what they're doing, they'll spend half the time it takes for someone in-house to do it. And if they're doing it in-house, they maybe don't necessarily, like Phil saying, know the industry as well. They don't know the tech stack as well. They don't know what things do what. They're not maybe as up to date with what's happening in the industry with it. So definitely start by outsourcing some of it. Like, I think, hiring a full-time person, I think you'd be surprised at how much less.
Well, we know
hours
how hard, like, even in our business, employing people is not an easy thing to do. Even if and especially if you don't know the function well inside out. So how do you know whether they're going to be good at it? Yeah. And from a tax perspective, Josh loves outsource because it's a tax deduction. Like you can claim it. Whereas an employee, you've got all of the on costs and everything that come with hiring an internal resource like that. So
we were also having a conversation the other day with a client that bookkeeping is not the traditional bookkeeping it used to be anymore.
No.
Not at all. It has evolved so much. It's more systems and processes and streamlining. It's not the traditional bank rec balancing the books thing anymore. It's way more advanced than that these days.
Yeah. Dan, do you want to pick that one up about margins? I mean, we get to see lots of builders in different kind of categories.
Just before you jump in there, Dan, I just want to make a little analogy of, like, for me, a personal situation. And Nadia was saying that when you've got someone in place, you get things ready, gets you in a system of doing things. It might be a bad analogy, but for me, I now have a cleaner because I wasn't doing the things that I want to be doing regularly enough in terms of cleaning the house. When the cleaner comes, I set it all up so the cleaner can go in and do it. So it holds me accountable to, like, picking all the stuff off the floor, putting the things away where they need to be so that she can come in and do it. And what ends up happening is we're more efficient in the home, we're more efficient in our cleaning, and everything works a lot smoothly. Same thing with personal training, and people, when you get personal training, you're more likely to eat and train well. Same thing in your business. So when you've got someone there that kind of holds you accountable to doing things, generally most people, I'm trying to say kick up the arse without saying arse. But
well, you're on the hook. You got skin in the game too. You're paying for it.
Exactly.
So, it kind of, like the personal training thing, like if you're paying for a personal trainer, then you're often quite a bit more motivated to make the most of it. And if they're a good accountability partner, then they'll be teaching you along with, doing stuff for you as well.
We also, sorry,
you go, Nadia.
We also get clients that don't want to hand over everything to any outsource bookkeepers, where they might say, look, I want to still do my own payroll, which is totally fine. So you're not completely out of it. You still have control over everything. Everything gets reviewed and approved. So it's up to you how much you are willing to outsource and how much you don't want to, outsource at all.
Yeah.
There's different options.
And ultimately that question around leverage, as a business owner, valuing your time, actually putting a value against it. And is it worth spending that time on something that you're just okay at and will, not really move the business forward in the way you getting out and doing sales and, working with your team and all those other things that are really important.
Often what happens as well when the bookkeeping was done sort of wishy-washy throughout the year, I think Josh can confirm this, is the tax accountants have to step in at the end of the year to fix everything, and they're way more expensive than bookkeepers. And then, you end up sitting with a big bill anyway. So,
and Dan, from a reporting perspective, like if you if you don't have the right hygiene in place with bookkeeping, you know, so things like, are we allocating, you know, overheads properly, COGS properly? If we've got carpentry teams moving from one job to the next, setting them up in terms of job tracking. Like Nadia said, you know, bookkeeping is not just these days about, you know, knowing how to operate Xero. They're really integration specialists now, and making sure that all of those platforms are talking to each other in the right way. So then you can actually see margins properly, and you can see the reporting that you need. And then Josh and the tax accountants have got a clean set of books to really be able to do the magic that they do in the tax space. Should we move to this question of margins around, you know, hey Dan, what sort of margin should I be making?
Yeah, so without trying to sound too arrogant here, but this is my wheelhouse. And Louise, with the utmost respect, I've had a look at the ATO benchmarks. I'm not a fan of the building construction space. So as a rule of thumb, I can tell you what your margins need to be right now. And I look at a lot of these and talk about this every day, hours and hours and hours. So your overheads, I mean, particularly if you're in the non-commercial space and projects that are sub 4 or 5 million, your overheads have to be single digits. So basically what that means is that for every dollar that pops into your business, overheads have to be 10 cents on the dollar or less. So whenever your accountant talks to you about, you know, percentages and overhead percentages and all the rest of it, all that is going, well, how many cents on the dollar are you burning as far as overheads go? So your overheads, I'm okay with 10%, but you know, rockstar territory is 8%. Has to be 8%. Because all business is just a game of ratios. A dollar pops in, and then cost of goods sold should take like an 80-cent bite out of that generally. So you're left with 20 cents or 20%, same thing. So if you're in the resi space, and you're I mean, so let's just park resi let's just park renovations for the moment. But if you're in the spec home, custom home, sort of sub 2 million, it should be 20% all day long. If you're in the renovation space, sort of sub $1.5 million, about $1 million, it should be about 25% overall. And then all it is just, well, what's the velocity of that dollar? So if you're running at a 20% margin, so ideally you want to see, actually, this is a good slide, Phil. So this here is a $1 million builder. So that one on the right-hand side. So they've got $1 million come through the door. Ideally, you want to have COGS at, you know, 75 cents or 80 cents. So if you're in the renovation space, your margin needs to be 25%. So COGS is spending 75 cents per dollar. So this is probably more of a renovation builder. Overheads there are sitting at 8%, which means for every dollar you generate, you're spending 8 cents in overheads. And then if you look at the bottom or the returns, net profit. So keep in mind, this is after you pay yourselves as well, because you benefit as a wage employee because you have to run the business, and you benefit as a shareholder. That big bar down the bottom in the right-hand corner, which is saying a 17% return, that's hard to get there. That's rockstar territory, but I've got clients there, but it takes a while. I want to see that net profit number be at a minimum 10%, at a minimum. Because questions that you guys need to ask yourself is when you're reviewing your analysis and you have good bookkeeping and good data and good visibility and good financial clarity is go, geez, if I was a shareholder in my own business, would I chip in $500,000 for 20%? If it's anything less than 10%, you know, my answer would be no. That's how you guys have to think and lens your business a fair bit. If you're seeing at 15%, giddy up, rockstar. Commonly, what I see is on the far left-hand side where you haven't got good data, invoices are bloody flying everywhere, cost overruns are everywhere. And you can sort of see as that $1 million comes through, you know, they're spending 90% or 90 cents on the dollar on COGS. Overheads blowing out because they're freaking out and go, oh my God, I need to pile in people and do this and do that, and they need more heads. Overheads blows out, and then guess what? You know, the bottom line's backwards. And then if you're not profitable, you're not generating surplus cash. And that's when paying creditors gets harder. You pay the ATO late. If you have good data, it works out.
I wonder just quickly, what about commercial space? You know, some of that, just in case we've got some people in that world. How do some of those margins vary?
Yeah, it depends on the space overall, Phil. I mean, I've got a couple of fit out guys doing really well. So they do like interior linings fit out. They sort of get about sort of 18% margins, but doing big projects like towers and stuff like that. I've got another guy up in Townsville. He does schools and stuff like that. His margins sort of sit around about sort of 14, 15%, but his overheads are sort of sitting at 6. Yeah. So 15% less 6, I mean, it's still pretty close to that 10% territory. So,
And
so,
obviously
so,
all of
so,
these are like benchmarks, you know, like it can be anything, but we're talking, benchmarks here. Leicester's begging to differ. Overheads also should be divided over the number of jobs being run. Well, this is a contentious subject that is fought out amongst accountants.
Yeah.
What's your view, Dan, on trying to squeeze overheads across jobs as well?
Yeah, with the utmost respect, Lester. Obviously, I mean, if I'm talking to a builder and they go, "Oh, how do I do my overhead recovery into a job?" I think it's a waste of time, to be honest. We go back a step and we go, "Hey, let's build a business-wide budget. What is your overheads?" Then we have to work out how many staffs we need and go, right, well, have we got enough staffs in the right margin to support our overhead base to make sure we're generating the right net profit? If we're talking about, hey, shall I be allocating an 8% or a 12%? Well, it depends how much income you earn each month, because one month you could be running at a 12% overhead. Next month, if you have nothing and it's rain, or the rest of your overhead shoots at 15%. What number do you use?
Yeah.
Like, I just, personally, and this is extremely personal, particularly in the building construction space, I think it's a waste of time. I think it's going, what's my overhead? I know what it is. I know how much revenue I need at what margin to support it. And I'm just going to run at a 20% margin because I know my overheads are running at 10. Because if you're trying to go 10% margin, 8% overhead, I think it just adds noise personally.
Yeah, it's very common, isn't it, Dan? Like that merging of overhead and cogs is funny because the cogs and overhead don't move at the same rate. So your revenue goes up, cogs will come up with it, but your overheads will start going sideways. So if you divide your overheads by a number of jobs and midway through the year you add another 2 jobs, you've got to go and recalculate the whole thing again. Because you're dividing it across a different number all of a sudden, whereas focus on the percentage that your target percentage, revenue will drive it with the right margin, won't it?
Yeah, exactly right. And the really, really important, you nailed it, Joshy. I mean, the really important thing with that whole job costing thing as well is that you want it to be measurable. So when you're trying to work out, you're 6 months into a project of an 18-month build, you have this revenue, you have this cost, you want to go, right, is the tiling on track? Is the formwork on track? Is this on track? And when you're sort of doing that job by job analysis, then you have this floaty overhead number. Then you're trying to do really complex recovery with overhead recoveries and all the rest of it. Like, we're not a manufacturer here, or do fabrications or frame and truss businesses. They would do that whole overhead thing. I mean, it's the same number. I mean, whether you have like a 10% margin at an 8% overhead, it's 18% margin. Same thing.
Yeah. And then there's a specific question there around the classification or coding of a site supervisor, whether that's a overhead or a site cost. This is someone who's currently doing 4 to 5 jobs in the new Resi custom space. So yeah, site supervisor, how do you code that one?
Yeah, so another good question as well. So if they are on, so let's just come back a step. When you're sort of building out your P&L, you really need to sort of separate people between earners and burners. And that's your cost of goods sold, and then that's your overhead. So your burners are people like me, rent, electricity, all that sort of stuff. So you need to make sure you rip that out of it, I guess, that whole job costing piece. Now, if you have roving supervisors that are on site, toolbox talks, do backup support for carpentry works, site supervision, all that sort of stuff, they are absolutely a cog. So you have to build those guys into it because they're part of the project delivery. They're adding value, even though they might not be swinging the hammer directly, but they're on site coordinating all the rest of it. If they're more back office and they just do, I guess, fluffy emails to clients and, I don't know, a little bit of project management, a bit of estimating, they're an overhead. So if they're a blended role, you have to split.
And that's very industry specific too, because I know in the commercial space, commercial contractors can recover contract admins as part of their jobs, but you don't do that in the Resi space because you don't price it in. So it's very industry specific. But probably the follow-up thing, Dan, is making sure that people are actually pricing site supervision in when you're estimating in the first place. Don't leave that on the table.
100%, Josh. Yeah, you nailed it. I mean, I sort of see these 1%ers get left out, and builders don't play with huge margins, and 1% adds up pretty quickly. You have a roving site supervisor who might be paid 120 across 4 jobs. I mean, it's a fair bit of cost.
And you can also track that labor cost through the timesheets, like I showed earlier. Even if they're on a fixed annual salary, if the pay template is set up correctly, you can split it out.
Yeah, you can allocate to COGS or overhead via the Zero Me timesheets. I'm mindful we're kind of getting into time here. Josh, is there anything, like we're coming up to the end of year for tax, etc.?
Yeah.
Any pearls of wisdom that you want to
Pearls of
share with
wisdom.
people?
This year is unfortunately not as exciting as the previous years where we had the immediate write-off. But let's just talk about some of those. What's still in store for what you should be thinking about, which everyone should be thinking about pre 30 June. Let's talk about assets for a second. So the amazing write-off that we had previously, where you could write 100% of assets off, that's essentially gone away for this year. There is a threshold of 20,000, albeit we're still waiting for the government to sort out whether they're comfortable with that threshold or not. But essentially, assets under 20,000 can be immediately written off. But the immediate write-off is a little bit of a furf anyway, because over time, if you sell the car next year, it sort of nets itself out. But the key thing is, whenever you're thinking about buying an asset, guys, don't ever think about buying the asset just to get a tax benefit. Only buy it if you need it. Say that repetitively. Only buy it if you need it. So there's no point burning through money, because don't forget, the actual tax benefit to you isn't 100%, right? You've still got to pay for the bit that wasn't actual tax deduction. So say you're a 47% tax rate, right? You're still got to pay for 50 cents of it anyway. So always keep that in the back of your mind. Always only buy it if you need it. And the 20,000 threshold, keep that in sort of the back of your mind. If you buy something over 20,000, it doesn't mean that you don't get any deduction. It's just you get the deduction over time. If we're going to talk about some logbooks and business use, yeah, as Julian said, if you just buy the Ranger, no. If you need it, buy it. Just be careful of workhorse vehicles. So there's this distinction between, what's a workhorse vehicle, where it can be basically not subject to a luxury car issue. If you've got work, like a single cab vehicle, clearly work use, I wouldn't be too concerned about it. But if you're buying something like a Land Cruiser wagon for work, you must keep a logbook for that vehicle, because you're just going to shoot yourself in the foot if you don't, because it'll hurt you very much at tax time. So logbooks, again, they're a 12-week register of business versus private. You keep it for 12 weeks. They're good for 5 years for that specific vehicle. And so that is absolutely critical that you do that if you're going to buy a car. There's a lot of questions coming through that I'll have a look at in a second at that panel. Other things pre 30 June, super contributions is something to always think about as well, whether you should be maximizing. That's something that should be discussed in the context of your overall financial plan too. Don't just do the sort of strategies in isolation, just putting money into super. If you've got a crappy super fund and you're putting more money into it, it's probably not helping you very much. So it has to be a whole sort of holistic sort of strategy if you're going to top up super. But it is a great tax saving benefit again as well, and one that's not as common necessarily. But if you've got some invoices that you're unfortunately, for whatever reason, not sure you're going to be paid, it's important to quantify it and quantify them as a bad debt, because you don't want to be paying tax on something that you're never going to receive. So make sure you quantify any old and overdue amounts owing to you and write them off. But I really hope you guys don't have a whole bunch of overdue invoices that you're not going to get paid. But the reality is that this does happen in the industry. They're probably the main little nuggets to be keeping your eyes on pre 30 June. We have got a federal budget again in May, so we'll see what happens. But we're not expecting anything particularly groundbreaking this year to be coming through our federal budget.
Awesome. Thanks, Josh. Louise has mentioned there, I'm not sure if you guys seen it in the chat, she's a bookkeeper. And yeah, you don't need to have someone on site in your office all the time. A lot of it can be done online. So, and yeah, Exact Accounting, Nadia is the head bookkeeper there. Is that the title, Nadia? I'm not sure what the exact...
Client director for bookkeeping, yes.
Bookkeeping. Cool, yeah, awesome. So yeah, Exact Accounting do bookkeeping. So if you need help, then obviously feel free to reach out to the team.
We do know a few outside of Exact. So if we don't have capacity to take things on, we do refer. as well.
Yeah. The key thing is having someone who knows the industry. So, not getting a kind of generalist, like just having someone who knows the software and how it all can talk to each other. Yeah.
Yeah, it's kind of what I mentioned at the start of the session here. Have to find people that actually understand the industry, because the level of knowledge, if you don't know enough about it, is just not good enough.
Yeah. Andrew has a question about whether we have an office in Melbourne. No, we don't, Andrew, but we've got plenty of clients down there. We travel interstate as part of the initial engagements often, but we find that a lot of our work, we're looking at screens with each other and talking through reporting and the like, which means that, remote actually works perfectly for this industry, and that we find that clients value the expertise more than they value having someone that's around the corner. As always said before. So it's the sort of thing that, you can do this sort of stuff remotely really well, but we do, Dan in particular is interstate regularly, visiting clients, and his team are out and about as well.
Just quickly on that as well. I mean, I know people can be a bit fearful of people working remotely, but I think if you flick that around on its head, it just opens up a talent pool to you guys. So ignore us and remove the bias. But if you can reach experts in another state, I mean, you just get access to a whole heap more talent, just not what's in your backyard. Just something to consider.
Yeah.
Well, as soon as,
Plus, everything's online these days.
Yeah.
yeah. I mean, I think
Yeah.
as soon as you look at, I want someone that has experience in construction, that just goes, phew, there's your pull right there. And then if you then have to say, I need someone on site, I need someone that can do the hours or whatever, certain ways I want to work, etc., you just shrink that pool so much. I think you'd be hard pressed now, I think, to find someone that hasn't been on a webinar or a Teams meeting or a Zoom session with their family across the world or something. So a lot of this stuff now can be done really easily. And as you saw there, I was sharing my screen at the start. I think Nadia or Phil was sharing their screens as well. So this sort of way of working is really it's easy now. And, Buildxact, Xero, MYOB, all of these softwares have abilities for people to log in and use your file and stuff as well, or be invited into it. So.
Yeah, I'm just going to bring a QR code up, so that people, if they do want to reach out, they can. If I can work the technology, okay.
While Phil's doing that, guys, if you're not already joined the Buildxact Building Block Facebook page, definitely hop in there. We're going to be running more webinars through there that don't necessarily get completely blast out to our whole client base, and we're just trying to run these a bit more frequently. And yeah, this is the first trial run we've done of this. Phil and I were talking about getting this sort of session up and running, and we actually, before you guys all jumped on, we were actually talking about what if we didn't get the questions and things like that, and we actually got plenty of questions. So definitely shows that there's a demand there for that. So.
Yeah. We didn't touch on it, but there's a lot of stuff on our website as well in terms of, Dan talked about the budget that he relies on very heavily, that he works with his clients on. On our website, we've got a free template you can download for that. There's a cash flow template as well. And one of the big topics that is misunderstood in this area is work in progress accounting, WIP. There's a really good video and downloadable template for that as well. So lots of, we just believe in handing out good content to people to learn more about how things work. And so if you want to do that on a one-to-one sort of consult where you can scan that QR code and we can set up a time for Nadia, Dan, Josh, or any of the teams to go through any sort of specific questions that you might not have been comfortable asking in this kind of an open forum. So yeah, happy to help.
If I might also jump in there, Phil, on our website, there's also a piece on STP2, Single Touch Payroll 2. A lot of clients in the building construction industry did not really quite understand the requirements for that and how the all-purpose allowances need to be split out from the actual ordinary rates. This is an ATO requirement. It's not a fair work requirement. So especially now that you're coming close to the end of the financial year, I would highly recommend that you have a look at that on our website and reach out if you need help, just to get your stuff set up correctly, potentially have to run some adjustments on your payroll so that you are all set and ready for year-end STP finalization, because it's going to raise red flags with the ATO if you're reporting it incorrectly.
Yeah, they're getting
Yeah,
alarmingly good now at data matching at the ATO and picking up
good. So good.
where
Yeah.
there are anomalies. Yeah.
It's not just as simple as enrolling your zero file into STP2. There's actually quite a bit of work that needs to go into splitting out the allowances. So have a look on our website. There's a whole piece on that.
Yeah, Nadia's done a good video just sort of walking you through how to navigate that.
Oh,
So
Zoe did that.
Zoe.
Yeah.
Sorry, Zoe, when you see this recording, I apologize.
And I was just thinking as well, if you're thinking about, you know, we're in Queensland, you may also be dealing with bodies like iCare and insurance. I can't stress enough how important it is to get an accountant that understands that as well. We have a good knowledge of HBCF as well as the QBCC's minimum financial requirements. We have a very good knowledge of, and so things, as an example, something like WIP is a little silent one. If you don't have it in there, it could actually be the difference between getting or not getting your iCare renewal. Something as simple as that. So you just need to be working with those specialists. So if you're wondering, and iCare is something that was concerning, or you're worried about, we can help in that space as well.
Yeah, good one, Joshy. Nadia?
Yeah, thank you. I think I've said what I had needed to say. I just jumped in there when Paul was talking about the website. But yeah, if I can just end off by saying having really good discipline with uploading documents and keeping your accounts up to date on a weekly basis, not leaving it to the last minute, and getting into that good routine is crucial for having good financial clarity. And then making sure you are STP compliant before the end of the financial year. Highly recommend that you read that article on our website.
Awesome. Thanks, Nadia. Sorry guys, I duck off there. Someone was at the door and they weren't leaving, so I refused. My dog was just going crazy barking, so I thought I'll turn the camera off and jump off. And,
Right, we got you, Jules.
Yeah, I heard you had my back, so perfectly fine. But yeah, I just want to say thanks to the team at Exact Accounting and Phil. He's never invited on these, but he always seems to jump on and show us or ask some questions or give his feedback in there. So I appreciate that as well. But yeah, thanks everyone else that joined on. Definitely join the Facebook page. We're posting more webinars and things in there. If you have any questions, obviously the QR code was there. Feel free to reach out to the team at Exact Accounting. And yeah, we'll leave it there. The recording will be up. We've got now an ability to have it on our website, so we're going to start putting those recordings up on Buildxact's website as well as the YouTube page as well. Cool.
Awesome.
Awesome, guys. Really appreciate your time. Thank you.
Thanks for the
Thank you.
question.
Bye, everyone.
Thanks, everyone.
Yeah.
Cheers.
Bye.
Bye.